Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the markets, and we had the FOMC reaction, which was bullish. And as far as, people keep asking me, what do you think of the rate cuts? It's hard for me to convey to a lot of people, and I know it sounds crazy to a lot of people, but I completely detach the economy from these charts when I'm trading them. I don't think about rates. I don't think about trade tariffs. I don't think about any of that, and that helps me stay as unbiased as possible with the chart. If the price is forming higher lows and higher highs, I'm bullish. If it's forming lower highs and lower lows, I'm bearish. That's all I care about. And it's almost like just pretending I'm trading the price of gummy worms right now. That's what I view when I look at this chart, and that helps me stay as unbiased and clear-headed as possible when I'm making my trades day after day. So looking at SPY, the bulls have complete control still. We closed up at the high of the day. We have a new support level. Our low of the reaction is 298.42. And if we head up and break the all-time high, 302.46, keeping in mind that SPY has a dividend distribution on Friday that's going to artificially adjust the price down. So if we want to know if the S&P 500 is hitting all-time highs, we want to look at SPX. So let's just pull up the SPX chart, because I'll probably be looking at SPX the next couple of days until that dividend plays itself out. If these bulls can get up over 3020 and 70 cents and 3028, then we're at all-time highs. Our new daily high or low, as far as I'm concerned, or at least our new benchmark level, is the low of the bearish reaction to the FOMC, where the bulls certainly bought that dip. And that's down off of 29.78 support. And I did make a play on SPXS on the bearish reaction, and then got stopped out as soon as the bulls showed up. And pretty small, I think it ended up being small in the red, but keyword being small, kept that price contained. And I was just going to hold it and try and see significant weakness if it ended up that way. Pretty much playing it as it were a hedge, even though I didn't have anything to hedge against. That's the way that I let that trade try and ride out a little bit. But we're now looking back up at all-time highs. The whole time during the FOMC reaction, while SPY was doing its volatility, SPY gave us a great 1-minute equilibrium. Let's go back to SPY. So I live streamed during the FOMC, and what we were looking at was the initial reaction and the initial range, and there was a great top fishing play. So there's our reaction. We dump, and we bounced all the way back up to it. Enter bearish, top fishing 359 resistance. We pulled back 7 cents under that, and then saw a big pullback of multiple dollars. Great trade there for that lower high. I was expecting an equilibrium with a 1-minute higher low to form and a tightening range, but obviously best case for the bears after that top fishing play. And I entered my bearish position when we saw a new low of the day below 29.64. So after the first minute, tried to go bullish, broke that low. I entered a bearish position. I sold half of it real quick. I entered another little half for top fishing, and then I got stopped out right around break even. But the bottom line is volatility gave some nice opportunity. In the end, the bulls win. And that whole time that volatility was going on, I was watching the financial sector, because I keep saying to myself, if the S&P 500 is going to see significant follow through on this weakness, the financial sector has to break the low of the day. And it didn't even come close. XLF held on just fine. And so that told me, as long as XLF holds up where it's holding right now, the SPY bears aren't going to get much follow through. And here's the reaction. Let's just look at that again. Here's SPY as comparison. Big upper wick, big lower wick, and then a dump to the low of the day. What was XLF doing at the same time period? Bullish reaction. Hold the low, lower high, higher low, bull break, higher low, bull break. No weakness, no bear breaks of support on XLF, which means the S&P 500 bears are not going to get any follow through, because XLF is the second largest holding in the S&P 500 as far as sectors are concerned. IWM, not necessarily. Well, you could make the argument it is still a bull flag. It's not as clear a bull flag as it was a couple days ago or yesterday because of this long lower wick, but the point is, there is a long lower wick, so we are still looking for a daily higher low to form. The bulls are hoping it's 155.07. We have to change the hourly trend with a higher low and higher high to be confident that daily higher low has been established, and then we'll be looking back up at the cup and handle setup that is still present here. QQQ, so our new support level, our new line in the sand is 190.11. If we don't break the bottom of the bearish reaction to the FOMC in the next few days, and if we can head up and break 194.71, the bulls affirm they're still in full control. XLF, daily bull flag, trying to confirm it is a double top at 28.60, so the bulls want to break 28.60 tomorrow. If we reject 28.60 and break 28.19 support, then you have a short-term red flag for the bulls. But otherwise, if we get over 28.60, it's just 28.72, and then next thing you know, the financial sector is at the highest price that we've seen in a year if we get over 28.72. And it's still a cup and handle setup here as well that the bulls need to follow through with. XLV. So XLV dropped down. The low was 90.90. We broke that level, but only by 11 cents. If the bulls are going to shift momentum in their favor, they have to break 91.70 to try and get some follow through on this bounce. But XLV the past couple weeks has been a bit choppy, and I haven't liked it for clarity. I've liked QQQ and XLF a lot more. XBI dropped down as well. It broke its low of 81.81, but again, only by 8 cents. So I'm considering that a base of support down right below $82, and the bulls are going to have to get over 84.12 to prove that they have continuation on this daily move. The VIX back down. It's the second lowest close that we've seen in a couple months, and we're looking down at 13.5, the lowest price we have seen as we close near the low of the day. Gold has a double bottom. So gold's base of support was 14.83, and we held that level. The bulls are looking for a weekly higher low to form, but we have to change this daily trend in order to be confident of that. I need to see the bulls break. The first signal would be 15.12, and the real convincing signal would be 15.24. But if we hold this base and start breaking resistances, the needle of the probability starts to shift towards probable that our weekly higher low has been established. Could you make the argument this is a head and shoulders pattern? Sure you could, but really all I care about is this base of support, and as long as 1482 holds, the weekly consolidation is remaining healthy and favorable of the bulls. Silver held support as well. The low was 1738. We saw the top of the move to 1807. Higher low now of 1749 trying to form. Bulls have to turn around and break 1807 to change the daily trend and set the weekly higher low. Bull miners, NUGT trying to hold base of support. So 2811 is our low, 3349 is our lower high, and here's the bulls trying to form a higher low compared to 2811. So have to hold 2811 and turn around and break 3349 to change this daily trend. So that is the range to be watching in the bull miners for the rest of the week. Oil. Inventory report didn't have a huge reaction today. We're still looking for a daily higher low to form, and we need at a bare minimum to get over the hourly exponential resistance and change the hourly trend to start looking for that daily higher low to form. So if we see an inability to get over this hourly 12-period exponential resistance, as we have seen multiple rejections so far, then we know our daily higher low is not set yet. Support is 57.67, and our hourly lower high is 58.94. Natural gas inventory report tomorrow is going to be key. We're either going to get a bullish reaction and look for another daily bull flag and get over 270, or if it's a bearish reaction, it's going to open up the possibility for a head and shoulders pattern. If this pullback were to head down into the mid to lower 250s, we would look for a right neckline above 251, but then if we bounce and fail to break the high and roll over, that could be an indication that weekly consolidation is due, and we already know it's due, so we're keeping an eye out for it. If we lose the daily uptrend, weekly consolidation is underway, and the bulls have a good cushion here. We can pull back, 4 or 5% and still be holding the daily uptrend. But if it's a bearish reaction, it sets up the potential of that daily head and shoulders pattern, and I'll be watching that into next week if that is how it plays out. So that's where we stand. Burden of proof in these markets remains on the bears. We have to see losses of the daily higher lows, and really long term, we have to break the August lows. I'm a bull in this market as long as we're in a weekly uptrend, and the S&P 500 is in a weekly uptrend as long as the August lows hold. So I have a plan established of what I will do if we start dumping on huge bear volume and the instruments that I will play to profit off of that. But until that happens, I am not going to fight this trend, and we're looking back up at all-time highs. Hope you have a good rest of your day. Hope you had a good day so far. Do good things out there in the world, and we will see you tomorrow. Low, high, higher, low, lower, high, higher, low, 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 low, high, higher, low, lower, high, higher, low. I'm ready to trade. Just need some higher lows and lower highs. Keep getting rejected by these middle Bollinger Bands. Come on, you fat bulls, you piece of mother goat loving fat. Here we go. All-time high test. Get it, bulls. Get it, bulls. Boost